Hello, this is Richard Pearce from Finextra TV in the Sustainable Finance Unplugged series. And I'm joined today by Tony Wines, who's the CEO of Turnkey Group. Tony, how are you this morning?
I'm fine, Richard, thanks. How are you doing?
Very good. You're in Singapore, so afternoon, of course, for you. And how are things down in Singapore?
Yeah, we're doing fine here, thanks, Richard. Getting through the lockdown and things are picking up well. So, yeah, good news.
Good stuff. Let's hope that continues. So we were chatting, and I was excited to bring the news to the Finextra audience. You take a very different sort of perspective, I think, from our normal conversations, looking at ESG data from a supply chain perspective. Tell us a bit more about you and how you got into this world, and perhaps give us an example of how you're working with a customer.
Sure. So for my background, I've been in the logistics and supply chain sector for 25 years. And then from that, moved into sustainability, working, again, very much on technology. Our company's based on software analytics and diagnostics of companies. And we saw that there was a big requirement, really, to look at ESG in a different way. Going beyond the process of reporting, but looking at it from the view of cost savings, productivity, and valuation of companies. And we see that ESG has a very big part to play in that. And Turnkey focuses very much on helping organizations to achieve the upside, both financially and in terms of productivity and benefit.
So I think you have, we'll come to it later on, but you have a kind of couple of constituencies, if we will, audiences that you work with. But on your corporate side, give us a sense of how, make that real for us in an example of a customer, perhaps.
So we map a lot of ESG materiality KPIs into organizations, and we support companies on the roadmap to that. We take it from the view, what are the most relevant indicators, so that we can look at the best possible cost saving benefits for that company. We've worked, for instance, with an organization that's looking very heavily on energy around manufacturing. And by reviewing the last 18 months of their performance, we've managed to showcase ways of saving maybe even up to $150,000 to $200,000 per manufacturing site, just in terms of energy reduction methodologies. So our system's very much based around trying to help organizations to achieve the bottom line piece from there.
Right.
Yeah.
So that gives you then the opportunity to go in, look at the organization, look at its processes and its operations. And then how do you sort of track that back into software? Is this a massively complicated process? I'm sure it must have a degree of that, but how do you do this?
So the level of complication or complexity comes with the maturity of the business. But we're finding that some companies, we can get a lot of cost benefit even by looking at simple things such as energy consumption through energy bills. So by looking at that and looking at a trend analysis and showcasing how they might be able to perform better, we're very quickly able to showcase to them where their weaknesses are, how they may be producing too much energy based on an intensity reading, and then working with affiliates and partners to help them to actually address the strategic bit, which is how to save the cost on the bottom line.
Right, got you. And then you bring that back into their regular reporting systems, ERP and accounting systems, do you? How do you sort of bring that back into the digital process of the organization?
So increasingly, we are taking information from API feeds from digital programs such as SAP and other types of large institutional repositories. Companies that are less sophisticated, we do it through more of a templated program where we're collating data, uploading it into our system, evaluating the trends and the analytics, and then going back to them with some recommendations on how they can improve.
Gotcha. And what sort of benefits have people seen, having gone through this sort of process for you, both on the productivity side, but also on the, understanding of their ESG gaps, if you will?
So one of the areas that they certainly improve upon is the process itself. So within the ESG process, a lot of organizations do see it as quite a complex piece of work. We're trying to very much simplify that process by digitalizing information from multiple sources, collating it and aggregating it. That also helps in the perspective of improving data accuracy. So whereas a lot of organizations are taking very manual approaches and finding that complex, we can digitalize it, we can centralize that data. We help them to also understand the accuracy levels and how they can improve from there. and then we feed that back to that organization from a strategic perspective.
Okay, and so and people are seeing therefore gaps in their system. You know, the classic sort of story of the hot air is competing with the cold air system in building number 2, and you know it's costing them a fortune, and so therefore they're able to also, obviously, one of those processes to address it or look at elements of their supply chain that are maybe not as strong and work with them to improve that. Is that the sort of thing that happens, or you know, please correct me?
Yeah, you're absolutely right. So we can be looking at from different operations, different sites and locations, which are the most efficient sites and which are the less efficient sites, and how do we, marry those together so that they're getting an overall improvement. And we look at it from a multiple variety of sources. It can be from energy, it can be materials, fuel, waste, and then also going into the social aspects. So one of the hidden factors that we see is a lot of organizations have some significant saving on the social impact side, which very seldom gets addressed as often as the environmental side, the pure environmental side.
Yeah, so that's really hard to do sometimes. How does that manifest itself?
So we address things, for instance, such as health and safety rates or number of injuries and insurance claims. We can correlate that to the cost to the company, and how can they mitigate some of those risks within the organization that can save a cost, improve employee welfare, and at the end of the scale also again create a bottom line on some of the social impact side.
Right. So you mainly operate in Asia. When you're bringing this data back and you're consolidating it, how do you then sort of start to use that data to help you in your work on the other side of your business, which is the sort of data work with the private equity firms that I know you've told me about?
Sure. So the private equity firms are really looking at these sorts of data sets in terms of really getting a full transparent set of information around their portfolio. So traditionally, it's been very difficult to get what I would call, for want of a better word, real life data or real-time data. So a lot of that information has traditionally been through public disclosed information for benchmarking purposes. We're trying to help the private equity firms to say we can go deep into your portfolio and really give them some good understanding of how that portfolio is performing, both from a risk perspective and also from an ESG perspective, putting financial metrics attached to it in terms of cost. And certainly the private equity are always very interested in looking at the cost saving benefits and the productivity benefits of their portfolio, but also looking at the risk side of it. So are there elements of this organization where we can mitigate risk and improve the brand and improve the profile of that business?
Fantastic. So you're bringing that the sort of holy grail that everybody's looking for, which is that sort of, as you say, material data, real world data, and then you're bringing it back to the financial services world so that they compare with all their other data sources, from disclosures, alternative data, estimated data, and they can create their own risk profiles essentially, which allows them to build their portfolios. Are you able to tell us the sort of organizations you're working with, and anything broadly that has helped them as a result of working with you?
So our two main profiles are corporate sustainability companies, which are organizations that are heavily embedded in the reporting and framework side. So particularly around the stock exchange frameworks or the stock exchange reporting. And the second part of that is the private equity in the financial sector, who are looking to get better data around their portfolio, benchmark against perhaps some of the publicly disclosed information, but with a richer data set of information to work with. So we see from that side of it a need to actually get very detailed information to the best of our ability from multiple locations, multiple sources, really map out the full supply chain, understand the full benefits that ESG can provide to that company, and then potentially benchmark it against either publicly disclosed sources or other industry peers within that portfolio that the PE might be working with.
Gotcha, fantastic. Now we love a bit of technology here. Tell us a bit more about your sort of technology position roadmap. Where's this all going? How do you do it today?
So currently, Turnkey works very much around historical data all the way to present day information. So we extrapolate a lot of historical information. review trends, analytics, and we use the diagnostic information to provide an outcome. Where we see the market going increasingly is into predictive analysis and AI. So we're really focusing a lot around that part of it now. So specifically around target settings and organizations that are looking in a more futuristic way. So how are we going to mitigate climate change by 1.5% to 2% in the next few years? That requires us to look at the AI predictive side of an organization to see how they're focusing on that on a more forward-thinking basis, forecasted basis.
Yeah, absolutely. So using that technology set to get into the predictive world, as you say, really being the big move forward for you. What about geographically? I think, as I say, you're largely in Asia. Are you? How many sort of how will this be scaled? I mean, it sounds like a great solution. How are you going to take it to the world for us?
Well, we are very heavily. We started very heavily in Asia. We now have operations in the UK, and we have an operation in Barcelona. We have representation in the States, and we certainly think that because of the nature of technology, systems like this are global systems. So we are expanding our network. We have about 135 companies now working with us in 49 countries. Our larger clients are collecting data. One of our largest clients is about 1,500 locations globally, and we're collecting data from all of those different locations and aggregating it here for them. So we see ourselves as already moving into a sort of global network. But our focus very much at the moment will be Asia and Europe to a degree because of the nature of the financial markets, and America picking up quite quickly.
Fantastic. Well, look, we wish you great luck with it. I mean, it sounds like a really important thing that's needed in the market, certainly from what I'm hearing. And it's brilliant that you're crossing both sides of the divide, you know, from the corporate into the PE world. So thank you very much for joining us today. Hopefully you can keep us updated on interesting stories. And we look forward to speaking to you soon. Thanks, Tony.
Well, thanks so much indeed, Richard. I appreciate your time. Thank you.